Good morning, Jags. This is Fahad. Today is Wednesday, July 1st. What's up? How's everyone doing?
Pretty good. Happy Canada Day to my fellow Canucks.
Yes, happy Canada Day. We're going to have happy US Day in a couple days.
Indeed.
Okay, let's start off with a technical view real quick on the S&P. Still the wedge and not much more to add. And that's all I'm going to say. Let's see how this thing gets resolved. All right, so futures are looking down a little bit on European weakness overnight. Um, but this wedge is waiting to be resolved either to the upside or to the downside, and time will tell. Now let's move on to single stocks. Global Blood Therapeutics, GBT, is the one that I'm watching closely today, and I'm probably going to try to make a play on this one if it starts to clear through $67 to $68 per share. Uh, First of all, the stock is retraced back from $80 up to down to about 63. And it has been building a base over here for the last couple of weeks, as you can tell. So if I draw the lines over here, the critical layer of resistance comes into play around $68 per share. If it starts to clear that range, then we're going to have the absolute clear breakout. And then I think this could have a air pocket all the way up to about $76 per share. So you can see here, and that gains could come rather quickly. And the reason for that is that GBT is guided higher by a couple dollars. It closed at 63 yesterday. It's trading in pre-market at about $66 per share after Goldman Sachs is upgrading the stock from neutral to buy and is raising the price target from, I believe, to $100 per share from 90. So they were already pretty bullish even with a neutral rating, and now they're just going to the buy rating and they're raising the price target. Now this is not the first time. I've covered this name multiple times previously. And as I've also pointed out, that if you look at the open interest in the September 75 calls, you will see more than 3,000 open interest sitting in the 75 strike. Those bulls were accumulating positions not too long ago, and they seem to be betting that we're going to see more upside in stock with a breakout from this base. And who knows, today might be that day when this thing could get kick-started with a little bit of rally coming in our hand. Now, the key reason for liking this name really comes down to the pipeline update that company provided in the last couple of weeks. Most importantly, for Oxbrita, which is for the sickle cell disease patients, the company has expanded its label expansion, or actually working towards that, to include lower age population between the ages of 4 and 11-year-olds. And they expect that they can start to treat that population by mid 2021, which is a clear sight of a label expansion opportunity as a positive signal that the FDA is comfortable with the safety profile of Oxbrita. And naturally, this also provides the upside to the commercial potential commercial potential. And then similarly, if you go back to the last earnings report, this has been the main reason why the company has discussed it's discussed how its upside revenue could be better than what the street has been looking for. So there is that Oxbrita. Just keep in mind, larger label opportunity and more upside to come. So let's see if this thing breaks out to 67, 68. There's an air pocket, at least $10 more to the upside, and I would like to capture that using short-term call options. And I'll be looking for either July or August calls to make that move. And the second thing that I want to discuss is really just a general note, which has to do with the gaming. Um, uh, um, with the Las Vegas Sands, Wynn Resorts, and some of the others. Hold on a second. Las Vegas Sands, Wynn Resorts, and MGM. We got the latest read from the China June Macau growth, and it's once again down 97% year over year. The gross gaming revenues in Macau. This is now 4 consecutive months, actually 5 consecutive months, February, March, April, May, June, 5 consecutive months of more than 90% decline in the monthly GGR report. And according to what I'm reading this morning, they still see that July number will also be down by more than 90%. The problem remains very simple, which is Macau is closed. The only reason why they even have a few percentage points at all, they're now down 100%, is because some local residents that actually live there in the island of Macau that can still go and play some games. Otherwise, no traffic is coming in. Macau is completely shut down. Absolutely all highways, airports. I mean, Macau is actually open, but there is a 14-day quarantine. So nobody wants to come from mainland. Nobody wants to come from mainland China. Nobody wants to come from Hong Kong and other places to Macau. And as a result, it continues to stay down. So we're going to see another little gap down and win in Las Vegas this morning. And the real question is really how long can this continue? Now, funny thing is that if I look at the second half of 2020, this year estimate, they're expecting at some point Macau will reopen and we're going to get a sharp pent-up demand come back with fourth quarter of 2020 forecast. That's, not the third quarter, but fourth quarter 2020 forecast being down 44% year over year. But my question is, what if it's not? What if it stays at more than 90% down year over year all the way through the end of the year? And you know what that means? That means that the full year guidance will continue to get cut. Meanwhile, these companies are burning cash on a daily basis. Significant amount of cash is being burned on a daily basis. So for example, for the second quarter, you're going to see the earnings report when they come out. You're going to see these numbers. For the second quarter, the Wynn Macau is expected to lose about $177 million. The Las Vegas Sands is expected to lose $259 million. And if you just extrapolate those numbers or break them down on a daily basis, all of these properties are losing somewhere about 10 to $15 million per day because they still have to pay for the overhead cost. So that's why it becomes so difficult and to basically like any of these names for a rally, because a large portion, more than 50% of Wynn Resorts earnings comes from Macau, and that portion continues to stay grounded at 0%. So that's it from me. Avo, can you mute yourself? Chronicle.
I am mute.
Oh, sorry, that I don't know who that was. Chronicle, what's up, buddy?
Morning, Fahad. So I talked about office furniture and Steelcase last week. The stock is guided to open down about 7% this morning, symbol SCS. Steelcase reported Q1 after the close yesterday. Terrible numbers all around. EPS of negative 18 cents, missed by 4 cents. Revenue of 483 million versus consensus 530, down 41% year over year. But what makes it even worse was that orders declined 16% in March, 47% in April, and 42% in May, even in the face of reopenings. According to the press release, additionally, orders declined 34% year over year in the first 4 weeks of June. Similarly, Herman Miller reported yesterday, and it was just as bad. They said their net sales were down 35% for the quarter, while announcing a sizable reduction in their workforce. So this all goes back to what I said last week. The Fed can print as much money as it wants. They can buy as many bonds as they want. The government can announce as much stimulus as it wants. But what they cannot do is force companies to buy new chairs and tables for their offices, or force companies to stop transitioning some of their jobs to becoming permanently remote.
Yeah, is this also a bearish read-through for Iron Mountain, IRM? Because, I mean, it may not be furniture related, but Iron Mountain provides all those services in the company related to shredding business and other ancillary services, basically office support systems. I would imagine these are the same end dynamics that are hurting Steelcase are probably also weighing on Iron Mountain. We haven't heard from this company in a while. But I think we're going to find that we're going to find this next quarter earnings report to be just as bad based on these comments. Do you agree?
Yeah, I think any stocks that are exposed to office capex right now is in a situation where they lose no matter whether the coin lands heads or tails. Like if we get reopenings, it's not as if companies are going to spend a lot on new office furniture or equipment. And if we do get a continuation of the closures, then we know what that brings.
Right. SCS is going to break down through this trend support when the market opens. And it seems to me that this thing is going to head towards a gap fill, which is below $10 per share. So even with a gap down this morning, this is likely heading towards another 10% below that level. I would expect maybe a potential defense by the bulls around 950. 950 to 980 level, and if it's unable to hold those levels, then it could actually still get worse from there. So something to keep in mind. Good stuff. Jay.
Hey, Pod. So, last night you were sending out some chart setups through Telegram, companies like Generac and Teladoc and Newmont Mining. One chart that caught my attention first was the medical device ETF, which is IHI. Daily chart looks rather good, looks poised for a breakout. And then I started looking at some medical device companies. One of them that caught my attention was Silk Road Medical. Ticker is SILK. This is once again, technically similar chart, looks good on the daily, poised for a breakout. This is a medical device company that's focused on stroke prevention. One of the leading causes of stroke is what's called carotid artery disease. And Silk Road Medical has an approach for the treatment of this, which is called transcarotid artery revascularization, which is just short for TCAR, TCAR. Yesterday, the company was out and announcing that a TCAR clinical competence statement, which essentially provided TCAR specific training and hospital physician credentialing guidance. This was published in the Journal of Vascular Surgery. Stiefel was out with a note last night saying that the announcement is just another incremental positive step forward for TCAR and Silk, and it just validates their role in treating carotid artery disease. So this announcement should be directionally positive for increasing the adoption of TCAR, especially at new centers, new hospitals.
Is it a significant opportunity on the revenue side that's not baked into consideration? It sounds like it.
Yeah, there is a, let's see if I still have the chart. There was a presentation that they had last month, and just talking about it's a $2.6 billion US treatment opportunity, because they separate it by current procedures, which is about $1 billion, which they can take over with TCAR, and then as well as another 1.6 billion from just untreated cases.
Good stuff. And I love this technical view. Basically, if you keep attacking that resistance on heavy volume, which it has done a couple times, ultimately you're going to break that. And from what it sounds like, what happened over here back in early May when the stock had a gap down on heavy volume, this was driven largely by the secondary share offering, which was pretty common theme in the second quarter by many companies. So that should be now behind us. Mm-hmm. Nice technical setup. And if it starts to clear through 40 to 50, today, tomorrow, then I think it's clear skies above that. Then it could run hard. Might as well get all the way to 50 plus. So I'll be watching this one closely. Good stuff. This it? Is it? Or next one? Is that it?
Yep. Sorry, that's it.
Okay, good stuff. All right. Quick and short this morning. Lots of coverage. Keep an eye on GBT for a breakout. There could be a play over here. Keep an eye on Silk Road for a breakout as well. And the last one that Chronicle mentioned, we're going to see a breakdown in steel case through the trend support. That's it from us. We'll see you in the chat room shortly.